Hello and good afternoon. My name is Mushtaq Kapasi. I am Managing Director and Chief Representative for Asia Pacific at ICMA. And I'm delighted to have you all here for this webinar on green recovery in Asia Pacific and the role of capital markets. We have Stella Saras-Chow, Head of Sustainable Finance International for ANZ, Dominique Duval, Head of Sustainable Banking APAC for Credit Agricole CIB, Kenneth Hui, Head of Market Development of the Hong Kong Monetary Authority, HKMA, and Bernadette Victorio, Regional Program Lead, Fair Finance Asia. I'm absolutely delighted to have this mix of experts today. We've had some great discussions before, and so let's get right into it. Okay, so the subject for this webinar is green recovery in Asia. I think it's useful to set out at the beginning, what exactly does green recovery mean? It's a vague term that probably means a lot of different things to different people. So I'd like to give some of the panelists a chance to address this. Perhaps Dominique, we'll start out with you. Could you tell us what green recovery means for yourself and also for your organization, Credit Agricole?
Thank you, Mushtaq, for the introduction, and good afternoon or good morning, everybody. Let's start with a very interesting definition of green recovery. That's true that you can more and more hear this term that is used. And what we are saying is clearly that it's driven by sovereigns or community of sovereigns. I would highlight first the European Commission. It's not Asia Pacific, but let's start with the other part of the world. So the European Union has recently announced, it was last summer, a strong green recovery plan. And last week, you probably have seen that more details on that and also more information about the financing of their green recovery plan. So it's a program of 750 billion euro that will be invested into green investment, of course, through the sovereigns or directly. And part of that will be, it's estimated to be 30%, 30, will be refinanced through the green capital markets, through the green bond instruments. So clearly, it means also having the need for the financial capital markets. Coming back to Asia Pacific, we have seen other sovereigns having the same intention. It's to inject liquidity to support investments that are climate-oriented, that are green. That's the case for the Republic of South Korea, which has announced last July a plan for 90 billion USD equivalent into green investment. And they've also highlighted, which is important in the terminology of green recovery, the social impact. They also want to make sure that it preserves the jobs. And they have put figures, of target of 1.9 million jobs, new jobs that will be created through the channels of green investments. PBOC in China has also announced a strong plan with some sectors that will be sector of attention, sector in which the government wants to invest money. It's like electric car, it's like green data center, it's like the rail infrastructure. So really focus on green investments. So it's clearly driven by the sovereign, but of course, the consequence we see as a financial organization, and that there will be the need for the financial parties to support, to make sure that the green credibility is here and that we have sufficient liquidity pockets to answer that needs for investments. Thank you.
Okay, thank you very much, Dominique. And I think that's a fair way to put it. The green recovery itself is really being driven by the national authorities, the sovereigns themselves, but there is a role for the financial markets to play, and we'll get into that in a little bit. But first, I'll hand it over to Stella as well. How do you see green recovery from your own perspective? What does that mean? How do you make sense of it?
I think the green recovery, to me, and especially in Asia, is a really strong acceleration of what we've seen in the past 3 years in Asia, which is investment in renewable energy. We'll continue to see, government policies support that, as well as the falling cost of installation. So for North Asia, countries like Taiwan, Korea, Japan, a continuation of their program. but we may see new investment in markets such as Vietnam, Indonesia, and some of the more Asian countries. Dominic made a good point around the electrification of transportation and the infrastructure that will go into converting vehicles, developing mass transportation for some of the more developing economies, and converting vessels from oil to gas, so lower carbon fuels. And an increasing focus on sustainable infrastructure. Climate risks are increasing. We're seeing more and more adverse weather events. So how we develop infrastructure will have to change. You know, the 50-year weather events are happening more frequently. And I think there is a rethink there. But we almost may have to think about the green recovery a little bit differently, how we looked at infrastructure in the past. You know, is it reasonable that the aviation sector will return to where it was pre-pandemic? Will supply chains, which were, you know, manufacturing concentrated in Asia, will that continue, or will we start to see decentralization? So we've been working with one of our customers, SK Innovation, who is developing an electric vehicle battery plant in the US, which they raised a green loan to support, because they're putting their manufacturing where their customers are and also where the demand center is. So I think certainly, as per Dominic's point, that shift and green recovery will be supported by governments, but we'll also see the actors in this recovery change, and we'll see some of the large energy companies, like whether it's an oil and gas company or, you know, traditionally in infrastructure, start to look at these new technologies as part of their own decarbonization plans. So the mix of people will also change.
Sure, and actually that's another crucial point here as well, is that green recovery is not just driven by national policies, but it's also going to be a function of the actual changes in the economy itself and the transformation of different sectors. Okay, so we've heard from two banks so far, but Bernadette represents the NGO sector and perhaps a slightly different perspective. So tell us from your experience, how do you look at green recovery, and especially in your conversations with policymakers and governments, and also you know, on the ground with organizations that are helping to really, you know, improve the environment directly. How do you see the green recovery, and what would you like that to be?
Generally, I think we all understand green recovery as taking this opportunity post-pandemic to really build back better, to put policies in place that are more environment friendly and focused on setting more environmentally friendly targets. But I think the other side that we also look at as part of the civil society, as Fair Finance Asia is also a program of Oxfam, is the social sides. What are the implications of moving towards the green recovery for people? And I think some of you are probably aware that yesterday Oxfam released a new study which was done together with the Stockholm Environment Institute, and it's called Confronting Carbon Inequality. And this study actually finds out that the richest 1% of the world's population are responsible for more than twice as much carbon pollution as the 3.1 billion people who made up the poorest half of the population between 1990 and 2015, during which there's been an unprecedented growth in emissions. And what does this mean, basically, if we are going to take it back to what it means for us in terms of green growth? This means that definitely there's a lot to be done and to be considered, not only at the environmental side, but also at the social side, because transitioning economies from one type of energy source to another, you're also moving labor forces, you're also moving communities with you. And therefore, there has to be a very strong leadership for us to be able to find a way to solve this climate crisis. And business as usual is definitely not something that's going to work anymore. Both public and private sector need to start developing very clear commitments towards the Paris Agreement and invest towards addressing environmental and social issues. And this includes reskilling the populations to be able to transition to new jobs and opportunities that will be available in a new green economy or a green recovery path after the pandemic. Of course, at the very personal level, that also means that all of us have a role to play as well. That means we have to rethink also our consumption choices. And that is a very personal level. So we see as civil society that everybody has a role to play, governments, the financial sector, but us also at the very personal level.
Okay, thank you, Bernadette. So it's not only just sovereigns, it's not only just looking at the various sectoral changes that are going to take place in the economy, but I think as you rightly put it, we can't forget the social aspect as well. And maybe green recovery is almost a misnomer because you know, the questions of green and the environment are intricately linked with other social areas. And maybe, you know, maybe this is beyond the scope of this panel, unfortunately, but the idea of green recovery goes beyond simply what you know, what the government is spending and what policies are. A lot of it may come down to individual behaviors, individual choices, and our own lifestyles. That might be a little bit beyond the scope, but we'll see if we can get there. Okay. Now, thank you all very much for setting the stage here. Now, what I'd like to do as well, since we are obviously a financial industry and most of the people on this call are in the industry itself, I'd like to go into a little bit more detail about what the role is that the finance industry can play in the green recovery. And perhaps I'll start again with Dominique. Just in general, how are financial institutions potentially helpful in the green recovery? What are their ways in which they can help? And maybe what are some of their responsibilities at this moment?
Thank you, Mushtaq, for the question. So actually, I would like to take one step back and to look at the latest financial crisis, the one in 2008, and to compare with what's happening now. So you may remember, it was really a financial crisis with really a lack of liquidity. And I think banks and other financial parties have really learned a lot. So we took lessons from this crisis. If you look at what happened this year, since the beginning of the pandemic, liquidity was there. So the capital markets, the banks have been there. The full ecosystem is here to support the central banks, the sovereigns, the banks, the capital markets. So liquidity has been, you know, very strong. Market has been dynamic. So everything is very strong now. And what happens between the two crises? That's clearly the emergence of sustainable finance. So now I think we can combine, you were talking about responsibility. So we can combine the responsibility as lender, as a financial party, and support to the financial world. So it's really a combination of the ESG aspect, and in more details, what we can do is to be also innovative. I think we have seen the green bond market, which is now a historical product in sustainable finance, being created more than 10 years ago. But now we can see different debt or equity investment. We have green bond, senior unsecured, you have green convertible bond, you have green cover bonds, to have better rating, better pricing. You have also the loan market being very dynamic, green loans, stability linked. And even you have, you know, the recent product that has been developed with ICMA, with the release of the stability-linked bond, which is a product that can be used by plenty of players. It's not a user proceeds bond, so it's a bond that for which the user proceeds can be allocated for general corporate purpose reasons. However, there will be some KPIs that can impact the pricing of the bond. And then you can give opportunity to all other players to be committed to improve its carbon footprint, environmental impact, etc. So I think combining, you know, the solidity of the banking system, the support to the capital market, and also the innovation and clearly the awareness of the ESG factors makes the ecosystem very strong now.
Okay, thank you. And two important themes there. First of all, I have heard it said before recently that unlike the financial crisis, which was in a way caused by the financial system, this crisis is not caused directly by the financial system, and the financial community actually has a role to play in helping to correct it, rather than itself being bailed out. So I do see this as an opportunity. And second, you mentioned the growth and innovation in financial products that are directly related to sustainability. We'll get into that in just a couple of minutes, and in particular, I'm looking forward to hearing from Mr. Hui of HKMA, a very prominent green bond issuer themselves. So we'll get into that in just a second. But first, I'll hand it over to Stella to give your view as well. You deal with a lot of clients also in the financial markets, but also represent a bank. And think about these questions a bit more broadly. So how do you see the role of the financial industry as a whole in this green recovery?
I think when I think about green recovery or energy transition, the CapEx required to implement the changes we need for countries to meet their Paris Agreement targets is significant, and it needs a lot of capital, and it needs a relatively low cost of capital to achieve it. And I think, as Dominique pointed out, the liquidity is there, the availability of capital is available. And if we take our guidance from the Federal Reserve, we also know that interest rates are going to be near zero, or in some markets even negative for some time. So the opportunity is there with liquidity and also cost of finance. I think if I look at it from a bank perspective, you know, what we've seen is banks really focusing on their own environmental sustainability targets to support the market through the products like green bonds, energy transition bonds, sustainability linked loans. And also looking, both banks and also investors, looking to de-risk their portfolios for climate risk. And you're seeing a shift in portfolios towards from high emitting industries to low emitting. And this trend will continue. You've already seen it quite explicitly in the coal-fired power sector, where, you know, a number of banks have said they would not finance any new coal-fired power projects. The other thing that you're seeing is for those banks and institutions that do finance these projects, the cost of financing has increased substantially. And we've seen that with one project in Indonesia recently, you know, the cost has increased almost double what we would normally see sort of 3 to 5 years back. So, but meanwhile, sort of contrasting that to the renewable energy sector, you take the Taiwan offshore wind market, where we've been active along with a number of our clients. These projects can be to the tune of, you know, $2 billion each, and they've all been able to raise the liquidity they need through multiple sources, local banks, international banks, export credit agencies. So projects that have lower climate risk and are part of this green recovery are going to have more access to capital than those that are higher emitting or associated with fossil fuels, because there is a real concern amongst banks and investors that there is potential in the future for these assets to be either obsolete, lack the financing, or even come up against regulatory or legal complications in the future.
Okay, thank you. Again, a couple of very interesting points in there. One is that, and I hadn't really thought about this, is that the financial industry does have a role to play in actually directing the mix of projects that are financed, in kind of choosing which ones get funded, which ones don't, through market forces, through their own choices, through their own evaluations of risk. And if the financial industry, in some ways, for lack of a better word, prefers sustainable investments, or creates a market that is preferable to those are the ones that are going to be funded in the recovery. And the second thing you mentioned are the behaviors of financial industry participants, in particular their balance sheets, you know, their choice of investments, their own operations. And this is a good segue, because that's something that Bernadette looks at very closely in her role at Fair Finance Asia, looking at Asian banks basically how sustainable they are from certain measures. Can you tell us a little bit about your work there? And then maybe tell us how the Asian financial markets are faring in this respect, and how prepared do you think they are to assist in the green recovery at this point?
Mm-hmm. Mm-hmm. Thanks. Actually, just earlier this month, Fair Finance Asia released a study looking at the financial flows across Asia's high-risk sectors, one being energy and power generation and extraction of fossil fuels. And these are the two biggest areas where we see a lot of cross-border investments coming to Asia, intra-regionally, and also coming from beyond Asia. And therefore, of course, also in line with these discussions, we see that these are definitely the sectors that are very relevant when you talk about green recovery. But what we really see, the role of the financial sector is, that's really the financial sector has a potential here to use its financial leverage to really direct, Asia towards a sustainable transition. This is really a great opportunity for financial institutions to do this. But foremost to doing that, we believe also that financial institutions have to start with their own policies. Stella mentioned it, that many financial institutions are in Asia are already saying that they're not going to finance new projects on coal or coal-fired power plants, and this is definitely a very encouraging sign. But of course, we have to also move fast enough if we are going to meet the deadlines that are being set along, the studies being done by UNFCCC, the Paris Agreement, that our climate is increasing temperature, faster than it was expected to. And so we definitely expect the finance sector to go through a fundamental value change from looking at the highest profit orientation towards highest sustainable impact orientation. This is really something that we want to see also as part of, having clear strategies. For example, if we're talking about transitioning out of coal, that means we're transitioning towards something else, and that is renewable energies. And while this is something that's, definitely much better, because in terms of degrading the environment, we all know now that fossil fuels are definitely something that we should stop using in the immediate future. But we also know that drastic shift towards that other side of sustainable and renewable energy will also create a very big impact to the communities. For example, first of all, the ones that are dependent on the coal sector, the mining towns, all these communities that are, built around power plants and whose labor and daily wages and livelihoods depend on those. On the other hand, moving so fast towards the other side, towards the renewable energy, can also create new set of complexities, because there's a whole new supply chain that provides also the components that are necessary to build renewable energies infrastructure. And here we now know that there's a lot of new investments flowing into cobalt and lithium mining. Even deep sea mining is now something that many of companies are exploring, and of course that many of us civil society are trying to prevent from happening. And so I think the key here is really balance. There has to be a very balanced approach of how this can be done. And this has to be reflected in a clear strategy within the next 10, 15 years, where financial institutions can really reflect their time-bound commitments on when they will exit coal and transition towards renewable energy. And with such strategies, societies will also be able to plan in advance how to develop new labor skills, for example, so that the communities will also transition towards the new green economy. So this is also something very important.
Okay, thank you. And if I may just follow up on that, I mean, you talked about strategies and the necessity of strategies. I mean, clearly all of the banks that I'm aware of, certainly that are involved with ICMA, they all have a strategy. All the corporates, they have a strategy. Even the countries in Asia, each of them have a strategy. So it exists, but in what ways may they not be good enough right now?
Right. And that's actually the other side of, and maybe Kenneth is here to answer this, because this is also the role that calls for the regulation to step forward. Yes, industry initiatives are very important and setting these strategies are important, but we also need smart regulations to be in place because these are cross-border investments, and unless we have proper cross-border policy coordination on how they can be enforced, on how we can have a common understanding of taxonomy or the requirements for disclosures and all these issues surrounding sustainable finance, you're absolutely right. We are not going to move towards, fast enough to meet our deadline.
Okay, well, great. Well, we will give Kenneth a chance to address that, as HKMA does have a regulatory role. But actually, first, I'd like to focus more on the product development aspect. And Dominique touched upon this, talking about the potential of green, social, sustainable, and even some new products like sustainability-linked bonds to help drive investment in sustainable projects, to help drive sustainable strategies for corporates and banks as well. But it's even more powerful, I think it's probably fair to say, at a sovereign level. So, Kenneth, from your point of view, I mean, speaking as an issuer as well, but also as a market supervisor, how can the capital markets themselves, the bond markets, help to build back better? And what more work do you think needs to be done on standards, market development, and other aspects of these bond markets to make them more helpful?
Well, thank you, Mushtaq. Well, HKMA being, as you said, a regulator, so we naturally think that the regulator has a role to play in implementing all these green and sustainable financing. I think as Dominique and Stella quite rightly point out, we don't lack capital. And as Dominique has quite well said, there are a whole range of products that could potentially channel capital to different green and sustainable causes. What we want to make sure that is that all these causes are quote unquote the right causes. So in that respect, we feel that some kind of standard or taxonomy would be helpful, just so that we can define what kind of activities are considered green and sustainable, and also to have some kind of common baseline for investors to make the assessment. And not just in the initial stage, and on an ongoing stage as well. Investor can monitor how their money is spent, including what kind of proceeds, what kind of purposes the proceeds are used, and also the impact, the environmental impact of the use of proceeds. Hong Kong has actually been working on some of these areas. So for example, the Securities and Futures Commission and the Hong Kong Exchange have been working on initiatives to enhance the disclosure and to provide greater transparency to ESG investment products. But I think as we look into embedding green and environmental friendliness into a broader range of products, including in banking, including in insurance, for example, we're slowly noticing that it's not enough just to focus on a sector-specific approach. We actually need to take a kind of broader approach, a cross-industry approach, and that's why we set up the Green and Sustainable Finance Cross-Agency Steering Group earlier in the year, so that we can leverage the experience of each other and also to make sure that each other's work are consistent. And I think it's not just a Hong Kong experience. I'm sure that different jurisdictions, not just in Asia, but in Europe, well, actually we're seeing that in Europe as well as in the US, probably are taking the same approach.
Okay, and actually that's consistent with ICMA's view, at least one point that you made in there, which is taking sustainability considerations and instead of just inventing new products and creating niche asset classes, really starting to embed sustainability into all aspects of disclosure, all aspects of the financial industry. And I think that's absolutely a trend that we're seeing globally. And it's great to see HKMA and the other regulators working together. Actually, that might be somewhat unique to Hong Kong to see that level of coordination on sustainability among the official sector. Okay, well, thank you, Kenneth. Now, speaking of the green and social bond market, unfortunately, I have to observe that the issuance of green bonds has actually not been growing incredibly fast this year. Certainly during the pandemic, the issuance of green bonds has been certainly softer than that of last year and of previous years, previous recent years. Now, of course, the issuance of social and sustainability bonds, as well as COVID-themed bond, has gone up, but environmentally themed bonds has kind of fallen off a bit. And perhaps, Dominique, I could ask you, why do you see this happening during the pandemic? Do you think it's just a blip due to the overall bond markets, or do you think it's an issue that needs to be addressed?
Yeah. No, that's true. That was a very special year for everybody in private life, I think, but also in the financial market for sure. I think it was very interesting to see the quick reaction from the capital market during the beginning of the pandemic. We have seen a lot of COVID-19 response bond being here to support the need for liquidity. So yeah, there was like an urgency in which the financial player have to play a role, and we have seen a lot of COVID-19 response bond for two main reasons. The main reason one, there was clearly a need for healthcare infrastructures, so hospital, research and development, for the vaccine, all this infrastructure, but also clearly the first parties being impacted by this crisis was a small macro enterprise that could not, during lockdown, be in a very dynamic position, and then really suffering from this impact. So clearly, we have seen, plenty of transactions supporting these two segments. So there was a need, and actually, if you look at the details of the figure, you see indeed a lot of increase of COVID-19, but it was also the way to develop the social and utility bond market, which was like a very small niche in the past year. And today, this year, it was about 1/3 of the global green and social sustainability bond market. But actually, what happens until now is that the increase of the global green social sustainability bond market has increased by 35%. And 35% is also the share of the social and sustainability bond market. So that's true. The green bond has slightly decreased, but we have seen during the last 2 months recovery of the green bond already. So we are very confident that the green bond market will come back, and that's true that in the past we have been used to see growth by 20, 30, 50%. ICMA was very happy, everybody was very happy. But I think now, yes, it will come back. I think we have already very emblematic transaction like the German inaugural green bond, so 6.5 billion. We have seen Bank of China. Bank of China is a very recurring green bond issuer that came back last week with the transaction green blue bond. So we are very confident. And I think all sovereign parties have in mind the key target, which is the one from the Paris Agreement, the COP21 targets. And it's clearly on the daily targets that we all have. So we are confident. The figures are already here, and we see the discussion with client issuers that there will be more and more green bond in the future.
Okay, thank you. So perhaps I spoke too soon and got a little bit worried before before the recovery in the green bond market. Well, let's keep that hope alive. I do think though while in my role at ICMA, I'm supposed to be talking about how much the green bond markets are growing and how wonderful that is. I think it's also important to realize the limitations of the green bond market so far. First of all, I think we have to be careful to recognize that the green bond market still is a very small, if not tiny fraction of the global bond market. I mean, certainly less than $1 trillion in green bonds throughout the history of green bonds, compared to more than $100 trillion of issuance in the current market outstanding. So still quite a lot of room for growth in the green bond market. And secondly, I think one thing that the market is starting to recognize is that it's not just about issuance volumes. I mean, we love to talk about billions here and billions there, but of course you also have to look at the impact and the additionality of those as well. and sometimes those answers are not as positive as you might want otherwise. But I think it's getting better. Well, we have a very interesting question from the delegates, just to change track a little bit. And I might ask Kenneth to address this one first, if you're comfortable. In what ways can we anticipate an overlap between the green recovery and an increase in technology-driven capital markets activity?
Right. I think there are a couple of ways that the intersection of finance, green as well as technology would happen. Top of my mind, what I can think of is that the integration of fintech, for example, in green. So say, for example, looking at it at a more technical level, at the issuers level, for example, we're increasingly seeing the use of, say, for example, blockchain and tokenization in the issuance of bond. And green and sustainable being a cause that is dear to the hearts of many of the general public, this could potentially change the way the finance market is structured. Say, for example, the bond market right now is very kind of institutional driven, to the extent that we can use, say, for example, technology like blockchain to reduce the cost of entry, to reduce the trading costs, so that more people, particularly the general public, can participate. I think that could potentially be a good thing. The second thing is that when we talk about green, a lot of the time, a lot of the hurdle that we see are in relation to information. How do you monitor the amount of, say, environmental impact? How do you monitor the amount of carbon impact? How do you monitor the amount of money that are spent on different courses? So we're already seeing many fintech firms that are using the latest technology to monitor how issuers use their proceeds, to monitor how these use of proceeds are turning into environmental impact. So potentially we can see that, you know, as technology advances and as more financial firms adopt these technology, they could apply it into the green area and make the green area more, you know, accessible to the public as well as more credible.
Okay, thank you, Kenneth. Just want to give a chance to any of the other panelists who would like to speak on this. If not, we can move on to the next question. Feel free to unmute yourself. And okay, all right, great. Okay, so moving on a bit, and actually this may be a question for all of you as well, and perhaps I'll start with Kenneth again, because one thing that Bernadette was talking about is making sure that banks have adequate strategies to be able to become more sustainable, to actually make that transition from current operations, however good they might be, to really what's needed to get us, you know, to the goals of the Paris Agreement in particular. And I think the entire industry has a long way to go there. Again, in your role, not only in your role as a supervisor, but also just in your role as an issuer, where do you see the most meaningful ways, the most important pathways for financial market participants to be on that transition pathway?
Yep, I think, well, to be honest, our role as the bank supervisor probably give us the most kind of leverage in this particular respect. By issuing rules and guidance, we can encourage the banks to properly take into account climate risk and to make sure that their business activity, their lending activities properly reflect and drive towards a greener and a more sustainable future. But I think regulation is a bit of a blunt tool, and by itself is probably not enough. So there are other aspects as well. The green bond that we're issuing on behalf of the government, one of the key objectives is to use that to raise awareness, as well as to increase the depth and the liquidity of our bond market so that we can encourage other issuers to come in. So I think that's one important aspect. The other aspect is to make sure that there is the right kind of quote unquote infrastructure. We mentioned earlier about, you know, standards and taxonomy, but I think that's probably just one part of it. We also want to make sure that the industry has enough expertise and has the right kind of human resources, human capital to support these new green finance, green and sustainable finance. A lot of the expertise right now reside in Europe as well as in mainland China. So we want to make sure that the rest of the world and Hong Kong as well would be able to capture these human resources. And I think one other important aspect is incentive. So right now we talk about the impact, the negative impact that climate change may have on finance, the risks that they bring, but also we want to make sure that they see opportunities as well. So green bond, sustainable bond, green investment, all these could potentially bring in a new batch of investors. Say, for example, in the fund market, we can see the rise of passive investment funds, but potentially ESG as a theme could provide a next source of growth for the current active fund manager as well. So I guess it's just about thinking more creatively and thinking about how green and sustainable can bring new opportunities.
Okay, thank you, Kenneth. And well, that's actually gone to, it reminds me of another question, which is about the investor base here in Asia. And I think it's fair to say it's a very key element of a green recovery. You obviously need the investor side. It's not just going to be governments funding this entirely, I would think. And traditionally, or not, over the last few years, I think it's fair to say that the sustainable investor base has been probably more robust and established in other regions than it's been in Asia. So I'd like to ask maybe with Stella and Dominique, from your perspective, how do you see the investor base changing in Asia for sustainability? Is there more demand for sustainable instruments since the pandemic or in recent years for other reasons? Stella, can I start with you?
Thanks, Mushtaq. It's a very interesting question, and also a very complex question, because Asia is, Asia Pacific is a global market, but it's a very local market. So that's true that globally, we have to admit that Asia Pacific was a bit behind the other market, the European market and the US market in terms of ESG green product appetite. Having said that, you had some niche in Asia, like the Japanese market, like some player in Australia, having, having structure, ESG, sustainable development bonds, very niche product everywhere. So the Japanese lifer like having social green bond transactions and have appetite for ESG product. And globally, in China, in Hong Kong, in other markets, we are also seeing this change. So more and more question. You have seen Ping An having set up a green bond fund. We are seeing some banks as well on the treasury side being quite active. So I do not see it in correlation with the pandemic. I think it's more a trend. For sure, there is a work of education, awareness, and HKMA is highly supporting that in Hong Kong. But clearly, I see a change in terms of the type of questions. We see some European investors having some, setting up some platform in Asia Pacific. So it's clearly moving into the right direction.
Okay, great. And Stella, what are your thoughts?
I would agree with that. I think, in terms of green-only investors, it's as Dominique described, certainly emerging. But we've also seen the green bonds or sustainable development goal bonds products, even energy transition bonds being very well received by the market, not necessarily only by green investors, but also investors more broadly as, the industry ESG matters, and it is complementary to their overall portfolio. So I think there's an increasing trend, and you'll see both ESG investors and also conventional investors attracted to the green and sustainable bond product. And the transactions that we've been part of in the last 3 months have been very well received. Okay,
thank you. So I've got, before we move on, a couple other topics I'd like to get to, but we've already started to get some Q&A, and there's one maybe somewhat slightly difficult question from one of the delegates. You may have seen news of a new report from the BIS that seems to argue that the actual impact on the environment of green bonds is maybe not as much as advertised. And I confess I haven't had a chance to read it yet, but I understand that what the conclusions were. And would any of the panelists like to speak on this, and particularly from your own experiences about how green bonds, obviously we all seem to be fans of green bonds, so perhaps give a bit of your own perspective, either anecdotally or quantitatively, on the actual positive impact of green bonds, or where the report might actually have some correct insights.
I mean, I think I can speak, give my views initially. I think when we are, you know, as a bank speaking to our customers about structuring, whether it's a green bond or a sustainability bond, there has to be not only compliance with the principles that ICMA has, you know, whether it's the green bond principles, social bond principles, but it has to be credible, and there needs to be a very clear material environmental benefit associated with the issuance. And that's typically confirmed by a third party, whether it's a second party opinion, so on. I think there is a risk that if the issuance is not green or doesn't have that environmental benefit, you do start to open yourself up to potential reputational risk, or even, you know, greenwashing, which is something that's the antithesis of what we're trying to achieve as part of sustainable finance. It really is to demonstrate, you know, how companies are supporting, you know, the green recovery, how they're changing their policies to incorporate ESG into their decision making. But what you have started to see, and the sustainability linked bond product's an interesting one, where you can maybe see the immediate benefit through the way that it is structured. So by setting sustainability performance targets that show a material reduction in greenhouse gas emissions, or build out of renewable energy, perhaps from an impact reporting perspective, it's very clear to see the additionality because you're going from one state to the other. Whereas, you know, the green bonds is focused on the why. But the other side of the coin is, you know, your green bond is backed by eligible green assets. Sustainability linked bonds, the funds can be used for multiple purposes. So, you know, I think it's an interesting question, and I haven't read the report either. But certainly in my experience, we view them as a positive way to communicate the company's strategy to the broader market, and also allows funds and the investors that we were speaking about earlier to build portfolios that support this important industry.
Okay, thanks, Stella. And Bernadette, would you like to address this as well?
Sure, happy to. Actually, about a month ago, Oxfam Hong Kong released a study together with Carbon Care Asia called Making Green Bonds Work for Planet and People. So this study analyzed 249 green bonds issued across the region in Asia since 2018. And the report basically found out that, for example, while 83% of the issuers disclosed sustainability context of their bonds, only 26% offered details on how environment impact was identified and assessed following the process of evaluation. And also, although green bonds do not necessarily embed explicit social goals in the design, we are also aware that there is a high expectation among investors now, as you mentioned rightfully, as the awareness continue to increase, that the investors are also demanding to see, you know, that these bonds contribute to social well-being. And this report also found out that only 6% of the issuers adopted the process to identify the social impact of their social bonds, and only a very small percent of 4% actually manage social risks. So I would actually recommend for those of you interested to please check out the study by Oxfam Hong Kong. And really what we're trying to say here is that, you know, the integrity of green bond monitoring process, there's a lot of improvement that could be done there. And from our perspective, for example, it would be very good to see, you know, higher standards to disclose what is actually being financed, and also to see, you know, improved reporting process and external review and consultations, which includes stakeholders, including the civil society, to really assess the impacts of these bonds. Because otherwise, we really see this as also, as what Stella mentions, I mean, it can be greenwashing or social washing. But if we are very much able to include, other stakeholders to be able to assess the impacts, as I mentioned before, because we are encouraging financial institutions to move towards that high, rather than profit going to more sustainable impact, then therefore they should be open also to this kind of review process.
Okay, thank you very much, Bernadette. Now,
if I may just add to that,
Please,
I think, well, I haven't read the BIS report, but I thought it's very interesting. And from, say, for example, the Hong Kong government's perspective, well, we issued a green bond to raise awareness instead of kind of to secure funding. So obviously the cost of funding didn't really actually impact our behavior. But I think in the course of issuing the green bond, we noticed that different government departments are actually kind of galvanized to think about, the green strategy of Hong Kong. Are we, just like what Bernadette just said, would we be seen as doing greenwashing? Do we really have a proper green strategy? So I think the impact of green bond actually work beyond kind of just simple cost of funding kind of route. Instead, it's more about, the whole corporate or institutional strategy, how it sees itself, how it want to position itself. So the mere fact of issuing green bond may actually be, encouraging a more green and sustainable path.
Yes, thank you. And I think that's very well said. And I think consistent with what ICMA would believe as well. I mean, of course, we would hope for measurable impact from the investments generated by green bonds, but I think there's also an awareness effect, a signaling effect, a change of behavior, a leadership role that issuers, particularly sovereign issuers, can play that can be beneficial. But I feel a little bit bad talking about this paper, not having read it and understanding it completely. So I think we'll move on from there. Now, one more question from the audience before we start to wrap up. We have about 5 minutes left. And I think this is an important one. Theme here is, are investors willing to accept a lower return for investing in green or sustainable bonds, all other things being equal? And I'd actually like to expand this question to think about, who is making the sacrifice, right? If we want to improve the environment, there are going to be winners and losers. It can't be a completely winners all game here. Maybe it can, maybe I'm wrong. Feel free to contest that. But I do think that at some point, there's going to be someone who's going to have to help pay for some of the externalities at least. And would that be investors? Would that be issuers? Would that be governments? Happy to open it up to the panel for any thoughts on that. And what are you actually seeing in the market right now?
Yeah, I can start.
Sure.
So of course it's a frequent question that we have. Should we see a different pricing from green bond compared to a conventional bond? I think that's been plenty of analysis. What we can see time to time is clearly some premium, greenium, we call it, to issue a green bond. But first, it's also a question of supply and demand. It's a market. So that's true that we have been able, in particular in the SSA segment, to find some advantage of issuing a green bond for the issuer. So that means a lower return for investors. But clearly, after it's really a question of supply and demand. I will take the example of the Enel sustainability linked bond as well, for which the issuer has committed a certain green KPI, and if the green KPI target is not met, the coupon of the bond will be increased by 25 bips. And what happens during the book reading of the book and the pricing, that the issuer could get a lower price thanks to the strong demand. So it's also a question of demand. But so far we are still pricing at the beginning a bond based on its credit rating. I would love having an ESG rating on top of the credit rating, but we are, I think, not yet here. We are improving. I think as a bank, for instance, we are including ESG factors into the credit analysis. So I think that if investors, credit rating agencies really have a strong share of their analysis, including ESG aspect, it will clearly have an impact on the credit, the rating, and then on the bond pricing.
Okay, thank you very much, Dominique. Now we just have a couple more minutes, and I have one more question, I think another important one that I'd like to ask, and perhaps I'll just give Bernadette and Stella the last word here, with just a quick answer, if you don't mind, from each of you before we wrap up. So in the recovery right now, in the pandemic, clearly the focus, the top focus is not necessarily the environment. I think we can all agree with that. It's jobs, well, it's health, it's saving lives, it's keeping people employed, it's keeping people safe, right? I mean, these are the immediate urgent priorities. How do we ensure that the resources that are allocated to these very important goals do not in some ways divert attention away from some of the very pressing but longer term environmental concerns that we have? And again, how can the financial industry be involved in helping to ensure that's the case? First, maybe Stella, I'll give you maybe a minute, and then Bernadette, the last minute. Thank you.
I think it's a really important question. In Asia, in the last sort of 6 months, you haven't seen any large-scale energy or infrastructure projects come to financial close. Everyone is very focused on the pandemic. Outside of the tech sector, M&A activity has been fairly subdued. And the risk is that funding that was earmarked for, whether it's renewable energy development, supply chain transmission to deal with intermittency when it comes to renewable energy, if that's diverted to healthcare or propping up, supporting financial institutions during this time, there is the risk that the green recovery will be slower than it could be. And it is exactly what you mentioned, that prioritization of funds. In Southeast Asia and South Asia, some countries are significantly affected by the pandemic, and they will struggle in the short term bringing about transition for those reasons. But maybe the other point to think is, you know, it's hard to sort of predict what we look like in a post-pandemic environment. Are we going to be back in the office, you know, 100% of the time? What that means for transportation networks, how we think about planning new centers. So, you know, I think the jury is still out, but one of my key concerns is exactly that, you know, funding is finite, and the immediate concern will be around supporting local economy rather than those larger projects which take a longer time to bring to fruition.
Okay, thank you, Stella. And Bernadette, last word to you.
Yeah. So I think the other way to answer the question, even if we take away the COVID lens here, is that the issues that we are seeing now are actually not new. The issues that are, you know, we are dealing now in terms of health, in terms of the infrastructure change that we want to see, moving from coal to renewable energy. These have all been there even before the COVID. And I think the pandemic is really giving us an opportunity to accelerate what we need to do, because having seen a scenario where all these issues could come, you know, and break down all at once because those infrastructures were not in place, access to health, access to good education, you know, jobs, people being skilled towards a green economy. These are things that we should be investing even before. And now we have the impetus to do this at a faster rate due to the pandemic. And I think that's really where we have to, especially the financial sector, with the leverage, with the influence that it has, particularly on businesses, the supply chains, looking at labor conditions, looking at really the social impact of moving towards a greener way to produce products, a greener way to power our economies. These are all having not only environment impacts, but also social impacts on the people, the communities that are benefited in the end. So I really, again, we see a very clear role here for the finance sector, both, you know, the regulator and the industry, and we also as civil society are providing all this information so that you can also see the risks, the impacts from the ground. And this is something that we really want to develop as a more collaborative opportunity for us to open the dialogue moving forward.
Thank you, Bernadette. And on that very hopeful note, we'll wrap up the discussion today. Thank you all to the for those of you in the audience, thank you very much for your time and your attention and your interest in this topic that is dear to our hearts, at least. And please, if I could remind you, just take a moment to fill out the survey feedback form that will appear on your browser after the close of this webinar, this event. I'd like to thank Kenneth, Bernadette, Dominique, and Stella very much for your time, your expertise, and your preparation. Please feel free to contact any of us if you have further questions, and we look forward to seeing you again at future ICMA events. Have a good day.